Where's the cloud? All right, cool. So let me backtrack just a little bit because I forgot to start the recording. Thanks, Jay Hall. So we're talking a little bit about trading mindset. My name is Thomas Wong, and yeah, let's dive right in. All right, so 3 different types of trading styles, profitable trading styles: average win rate, low win rates, and high win rates. Right? You guys can see here, average win rates, you're just shooting to make a little bit more than you lose every single time. Even if it's only you're making net 0.3 R or 0.4 R every, every 2 trades, approximately on average, still great. If you're making 0.5 R or even 0.7 R every 2 trades, that's actually life-changing money. I think Jeremy kind of went over some of the math with you guys earlier. It's really does a lot, and you can scale your R from there, right? R is just your risk unit, how much you're comfortable losing on a trade. Our personal recommendation at Real Life Trading is to start off small and then build that R over time. Just because when you are first starting to trade, doesn't matter how long you've been investing. Well, we'll talk about investing later on, but it doesn't matter how long you've been investing. Trading is a completely different ballgame. And when you first get started, beginner's luck notwithstanding, you're the worst you're ever going to be at trading. Just saying it like it is. Whenever you pick up something for the first time, you're generally going to be the worst at it right when you pick it up. Makes sense, right? How many of you guys can expect to pick up a basketball, lace up your shoes, and get on the court with LeBron James or Steph Curry? You guys think you'll do well trying to play basketball against those guys? I mean, even against someone in the NBA that sits on the bench all the time, my guess is that they would probably destroy any one of us that are not NBA players at basketball. And that's because it's completely different, right? If we're just getting started, they have their entire lives of training for that game. Much in the same way, there are very little barriers to trading. You can literally set up an account and start trading with the best right away, right? You could be taking the opposite trade as Jeremy on a day trade. You don't know that. So all that to say, start off small. And our thought process is that generally, just to get your feet wet, just to get started, average win rate strategies are probably an easier go-to. And then you can start adding on some of these other strategies, because I will tell you, I do have strategies for all of these. Tony was on, I'm not sure if he talked about credit spreads and put sales. I do a lot of naked puts, a lot of covered calls. I also do bear call spreads, all of that, bear put, bull put. All of those strategies have their place, but it's different for every person. I know people that exclusively trade this way too, right? Just as I know people that exclusively trade this way. I know people that exclusively trade this way, and they just have to have a bigger stomach for this bigger than average loss, because it can get hairy sometimes. You get caught off sides, especially if you don't manage your risk well, or if you just have the stomach for it. It can get pretty crazy. I've seen people go from like taking a probably was like, maybe it was a $200,000 account, having $300,000 worth of gains and getting that eclipsed in the matter of well, not eclipsed, but down to just like 100K worth of gains in a matter of like a week or two. It can happen. So bigger than average loss is definitely real. Anytime you get someone trying to say that, oh, you can implement the strategy and make money every time, or supplement your income, or increase your dividends on a stock, they're usually talking about this higher win rate strategy where you're doing some sort of covered call or naked put or some kind of spread, credit spread, to generate a little bit more income. They're great strategies. You just have to know when to use them, because in my opinion, having them on all the time is sometimes, you have to also learn the market as well. And sometimes they won't perform as well, or you just have to know how to hedge them. See, someone's saying does a 2-day expiration in SPY 3 times a week. Yep. Those are definitely income generating move. 60% win rate is well, you're probably just managing it a little bit tighter, but 60% win rate is not bad. Could be a little bit higher for that strategy. I've seen higher, but you do have to be, it's a strategy you have to be careful with. You got to manage it, right? A lot of times, if that gets away from you, that could end up being a pretty gnarly loss if you don't manage it well. Eclipse a lot of gains. Not uncommon for newbies to win 9 times out of 10 and have the 10th one take out all or most of the gains. These strategies here are low win rates, very big wins. A lot of times you'll be taking a lot of paper cuts. It will feel like death, like 1,000 cuts a lot of times until you get that big win. And when you get that bigger win, you have to know when to hold it, still have to know when to exit it. So sometimes can be difficult to do. Any questions about just styles of trading? This kind of, if some of you were wondering why RLT was focusing on one strategy, focusing on some tickers, it's really because of this. Really, average win rate is just more palatable to more people, and it's something where we can help people get profitable with something simple initially. There's time to learn these other things, right? I have also known people that have traded the markets and watched the markets well into their 80s, some of them into their 90s. So this is a skill that you can have for your literally entire life. As long as the world keeps turning, as long as the market is out there, this is a skill set that you can use for the rest of your life. Yeah. Yep, that's good. That's good, Santiago. All right. So all that to say, there's no rush in trading. You shouldn't feel rushed. And we're going to talk a little bit about why as well. All right. So some other things about the psychology of trading. Rule number 1, there's no holy grail strategy that works all the time. And I know that's sometimes hard for people to swallow. I know it was hard for me to swallow, being a former engineer. A lot of times if I'm wrong and the parts on a plane that goes down, that's it's not good. So there's a lot of big focus on being right, getting things right, and there's a right way to do things. Now, something can always go wrong, right? Anyone that's an engineer knows that anything that can go wrong will go wrong. But even the biggest hedge funds, the biggest brokerage houses out there, the biggest market makers, they have teams of people coming up with algorithms that they modify, and they're on salary for a reason. Those things need to keep adjusting. For those of you that like to read or listen, a good book is When Genius Failed. When Genius Failed. This tells a story of long-term capital management. And they had I think it was 2 Nobel Prize winning mathematicians on their team. A little bit of selling into the close right here, but pretty much not doing a whole lot today. Now, sentiment wise, does tell us something, but yeah, not a whole lot of movement today. Anyway, When Genius Failed, great book. You should check that out if you want to hear more about it. 2 Nobel Prize winning mathematicians, one of them came up with the equations to value options. And their strategy worked until it didn't. They had one of those very high win rate strategies. And that 10th time that it didn't work, they simply didn't have enough liquidity to stay in their trade. Even though they had billions of dollars backing them, they didn't have enough liquidity to stay in their trade. This was happening actually right before the Great Recession too. So yeah, could have happened a little bit earlier had it actually gone south. Long-Term Capital Management was the name of the company, but the book is called When Genius Failed. So I'll throw that into the chat. So there's no holy grail strategy that works all the time. It's a famous quote, the market can remain irrational longer than you can stay solvent. Right. That certainly proved to be true. Yeah, I believe so. Certainly proved to be true in the LTCM's case, in When Genius Failed. True story. All right. So that being said, there's no holy grail when there's trading. What does that mean for us? That means there's opportunity. That actually means that because there's no holy grail strategy, that there's flexibility, right? If there was some sort of holy grail strategy, you would have that employed by the biggest money that's out there, and it would edge pretty much everyone out. The reason why there's no holy grail strategy is a lot of times that they once a strategy starts working, people implement that strategy and accept smaller and smaller margins until it's gone. So that's why there's arbitraging, and that's why there's high frequency trading to arbitrage things out of the market, and those are gone and for pennies on the dollar, right? That's all that they're taking. Matt B says, if there's no holy grail strategy, then do you adapt a lot? Yes. Yeah. This brings me to my next point. The market moves in cycles, and so do strategies. So we've had strategies, everyone has strategy where it'll be working for a long period of time, and you'll go on a streak of losers, and then you have to ask yourself, are you just going to stay the course and just over a large amount of trades? Anyone's familiar with math, when you talk about averages, you have an idea what's a large amount of numbers. It's not in the tens, it's not in the hundreds. Thousands is like bare minimum to even get a good sample set, for a true sample set over a long period of time, and have to go through different cycles of the market. How many people think that the exact same trading strategy that worked here, like for this move, works here or right here? Or the same strategy that works here works here, right? All these boxes represent different types of market cycles. You have just a bull trending market, right? You have a very choppy sideways market, downtrending market. You have some choppiness here, right? Different strategies work better in those times. Now, this is obviously on a shorter time frame, so you can withstand that, right? You can adapt somewhat, but there were definitely times when I remember vividly trading like 30-cent ranges on the SPY. That's kind of pretty crazy to do right now. With much larger ranges in the SPY. And or even I think we got as low as like 10 or 20 cents on the SPY, because that's all the movement there was at that time, period of time. The volatility in the indices was really, really, really low. That's not the case right now. It's not the market we're in, right? So yes, you do have to adapt. Your same basic strategy will work, just not all the time. That's why you have those drawdowns. That's why we say, hey, if you're getting a 1.2R average and your average win, and you're getting a 0.7R loss on average, just by virtue of saying that statement, we're telling you to expect those losses, right? Because that's what happens. There's good trading setups that lose P&L wise all the time. That's why you've heard other people mention our job is to follow the plan. And the plan can adapt and change, but you want to follow the plan, because if you don't, then you're just shooting from the hip, and you're not, it's not something that can be measured against, right? Whatever can be measured gets managed. Same thing in trading. Right now, am I looking for any particular trend reversal pattern? Yeah, if you missed the start of it, we're seeing one right now. 2 back-to-back upper shadows, wicked pair candle, last 2 candles, bullish wicked pair candle. That breaks down. Yeah, we'll have a little bit of a short-term reversal. We'll get something like this. Yep. Fully expect that. Do I think that this is the highest peak, or that we're never going to go higher from this ever again? No, I don't. I do think we can eventually we'll retest and then probably bounce on higher. I do think that is likely to happen, just with the way the market reacted to the CPI, the rate hike, and the initial earnings from the mega caps. Yeah, exactly. Exactly, Santiago. Yeah, your bull put spreads won't work in a down market. Selling calls, yep, can put you in losses, even in a bullish market. Yep. Timing is everything. It's true. And different strategies work better in different markets. It's kind of the point. So just some framework psychology on some basics. So let's see. I mentioned that trading is a skill set that you have for life. So those of you that want to get into trading and quit your job in the next 6 months, I have a blog article you should read. Let me throw that into the chat right now. 7 things you should do before trading for a living. Pretty much every full-time trader that I know has other sources of income. So yes, trading could be the main way they make money. It could be someone that's pulling hundreds of thousands of dollars out of the markets. Could be someone that's making 5 figures out of the market. Doesn't really matter. But trading, in my opinion, works a whole lot better when you have other sources of income and you're not pressured to take a trade every single day. We're not pressured to take a trade even every single week. Now it's always enticing to want to trade all the time. And I'll tell you a personal story. So when I made the break and I started trading full time. It wasn't my only source of income, but regardless, what do you think happens when all of a sudden now trading is my full-time job, and in the first 30 minutes of the market, I pulled out let's just say I pulled 1.5 R. This was a very common scenario. Actually, no, let's not do that. Let's do 0.8 R, because this is common too, right? Take one trade, you made 0.8 R on the day. First 30 minutes, not bad, right? So let's say you have a $500 R, 0.8 R, $400, it's not bad. But you're done, I'm in California, right? So half an hour into the market is 7 a.m. my time. What do you think happens when you're done, quote unquote? You've made money. You made $400 is more than a lot of people make in a day, right? Their full-time job. What happens when you made that type of money and it's only half an hour into the market? What do you think happens? Nap time, press it. You want to make more. Yeah. You want to make more, you press it. Sure, you can go take a nap, and you go take a nap for half an hour, you wake up, then what? Go play golf. Yeah, there's certainly people that do that. What happens is a lot of times you get drawn into the market, especially if you're watching it all the time, because this is my full-time job now, right? And you get drawn into the market and you take another trade, right? What's wrong with that? Well, sure, my average loss can be a 0.7 R, but you're still putting a full R at risk, and you could go green to red. And then what happens, right? If you take a full R loss and you're down, instead now you're down 0.2 R. Oh man, I was green, now I'm red. I got to get it back, make it a little bit more, take another trade, and all of a sudden you're down, maybe you lose 0.7 R, now you're down 0.9. Right? It's like, well, it's okay. Maybe it's only been 2 hours of the market. There's still a lot of time left in the day, and you want to take another trade. And what happens then? Maybe you win a little bit and you're back to even, right? It's like, okay, now I'm back to even, you're flat. What do? You took 4 trades and all of a sudden you're even on the day, right? Whereas you could have quit right here, but because this is the mindset a lot of people have, is this is when I'm doing full time, I should be here in front of the computer trading. It's not the case. I'm just here to tell you, quite frankly, it's not the case. You don't need to sit in front of the screens all the time. Can you manage swing trades, manage your investments, your position trades? Sure. But your job is not to trade, actually, right? Your job is to follow the plan. And if your plan says that, hey, if I'm up less than a full R worth of risk, then I'm done. Great rule to have in your plan, by the way. How many market cycles do you think is enough to full time? So I think what's interesting now is that, you can, just in our day and age, you can actually experience different market cycles in real time, and do that as part of your back trading. It's a great question. So there are plenty of services out there. TradingView has it. Thinkorswim has it. There's lots of other ones. Those are the main 2 that I use, where you can back trade, right? You can replay a day as if you were there, right? So if I wanted to, you can just, go back in time, right? And then you can see, okay, this is what happened in the queues back in whatever date this is. It's going to be December 28th is the next day. You can zoom into a 3-minute chart and we can see what happens Oh, I just lost it. But oh, I went too far back. Yeah, don't have historical data for that far back. So you can go back. You just use a higher time frame, but you can go back and you can trade that day. Thinkorswim definitely has that data, so you could do that. I probably have to pay for a little bit of higher subscription on TradingView to go back further. But you can replay those days and trade those days, trade your strategy in a different market, and you can do that off hours outside of the market open. Highly recommend it, by the way. The tool in Thinkorswim is called On Demand, and then the tool here is just the bar. It's a bar replay. Yeah. The good thing about there's pros and cons to both. I won't get into it. You guys can experiment for yourself. All right, let's see. Yep. Yeah. Follow your winners, see how you can make more, follow your losers, learn what went wrong. Yeah, it's good. 6 years in crypto market cycles over there way faster. It's true. Trader in stocks in the long shot. Yeah, definitely a highly personal question there, but yeah, for anyone that wants to get better, this is kind of what we're talking about in terms of trading psychology. In terms of just being a better trader, I think if you adopt a lot of these mindsets that you want to have goals and dates on how fast you're going to get something done, but I think it's also unrealistic to say, all right, just because I want to study and become a doctor in a year, how practical is that? From my experience and the friends I know, it's not very practical, right? Has to be reasonable. Could you do that with trading? It's possible, but it's possible to, I would say, get proficient. You're probably not going to be an expert in that amount of time, but you'll be proficient enough to be profitable and be on your way. Especially if you went at it, you did a lot of back trading, as we were just mentioning, looking at different market cycles, trading your strategy in those different market cycles, taking down all of that data, making sure that over literally 1,000+ trades that you're more profitable. It'll give you the confidence to keep going at it, increasing your R, and sticking with it. So yeah. So that's some trading psychology for yourself. Now, for the market, what's interesting is I initially approached the market as more of a numbers game, right? My background's in engineering. That's what I naturally gravitated towards. Looking at numbers, what should happen when things break out. But if anyone that's actually thought about the market and realized what it really is it's actually more psychology. What we're seeing, these candlesticks that we're looking at, these are people buying and selling. These are people that are acting on emotions, typically. And that changes things a little bit, right? You have to understand, what are people feeling when this happens, right? Like when we gapped up on this day, I was like, okay, well, what were people feeling? What happened here? We pushed up, we retested a nice level here, and we were gapping up. I mean, that's why it was pretty clear that we would have some sort of bullish follow through. Now, did we know necessarily that it would come up and eclipse, these two basically eclipse these two bearish candles? No. No one's I don't think anyone can say that they have a crystal ball or a time machine and they know exactly what's going to happen. Now, if you do, let me know, and we'll all be billionaires tomorrow. But so far, haven't been able to do that. But understanding the sentiment of the market, understanding why things gap, and we actually inherently built that into the 10 EMA strategy, right? Where if you want to trade something right towards the market open, there better be some sort of gap. That's basically why it has to open above the candle, or has to open below or above the previous open, right? So if you guys have that trading plan in front of you, that's why some of those criteria is built in there, because it weeds out a lot of stuff that would be choppy, like in here, right in here, right? There are obviously some days in here where the plan would have qualified on some things, right here, right here, right? Those days could have expected something to happen, and it just didn't pan out. Looked like great gaps, and they weren't. Do I have a scanner? Yeah, I do. There's a couple different ones. If you want, well, there's a free one. There's bar charts, barcharts.com right here. We'll post 30 minutes before market open. We'll post a list of gap ups and gap downs. It's free, so it's a good one. I still use it to this day a lot of times. Yep. No worries. There are definitely paid ones where you can do a lot more with it, but if you guys are really interested in that, then reach out. So ones that I'm not affiliated with, by the way, they're just ones that I know people use. All right. So trying to refocus here. Thanks for the questions, by the way. Feel free to interrupt anytime. One of our main missions is to, well, our only mission really is to enrich lives. There's some of us that don't need to necessarily do this, but we want to do this because we want to have more impact in the world. So, and it's much easier to have impact when you have the resources to do so. All right, let's see. How much time do we have? Oh, I should switch gears a little bit. So we're going to chat a little bit about long-term investing. So that was a little bit about trading mindset. Sorry, it was rambling. Sorry, there was some interruptions, but it's all good. We welcome those interruptions. We want to get questions answered. So talk a little bit about long-term investing. So all that to say, trading, we talked about trading styles. All that to say, trading is a great way to produce some income. But in my opinion, it's not the best way to actually grow wealth. Let me say that again. Trading is a great way to produce cash flow, to produce income, but in my opinion, it's not actually a great way to produce wealth. Why do I say that? Well, if you just look at what happens over time, I know for a fact that there were trades that I took down here and I made some quick money and I got out. There's also shares that I bought down there and that I held in my longer term accounts. In fact, I can tell you, I remember the exact candle it was on the SPY. Right here, 220, wasn't all twos, 220.02, I think. Yeah. Bought shares there. Almost got the exact low. But yeah, those shares were in a longer term account and I held them for a lot longer than I did any sort of day trades that I took, even on even on like this day right here. Nice gap and go, especially after trapping this candle, was a great day to be bullish on a day trade. But I will tell you, I exited those shares that day. And what ends up happening? Well, market went on a little bit of a bull streak right there. Let's just see. You know, even if we went up to here, 88% return, not bad. So knowing that, what do we do? Well, quite frankly, a very popular thing to do is you trade whatever gains you make, 10% of that, pull it aside and earmark that for long-term investments. Doesn't mean you have to deploy it right away, but you earmark it for something else. Assets make you wealthy, right? I think we can agree on that. You know, most people, when they talk about how much Elon Musk is worth or Jeff Bezos, they're talking about how many assets they own, what the market value of those assets are. And you really have to build up that base of assets if you want to experience that wealth. At some point, it becomes hard to day trade the way that most of us do with a certain R. At some point, it becomes more difficult. If you think about how many shares you would need to have, so let's say you had like a $10,000 R. Okay, it's not even. I mean, it's large, but I know people that could have a larger one. So $10,000 R. I do not use a $10,000 R. Just tell you. But even if you had a $10,000 R, let's say you had the Delta trade today. Zoom into that. All right, Delta, let's go 3 minutes. Auto. Boom, boom, approximately that, about 20 cents, right? Yep, approximately 20 cents worth of risk. So 10,000 divided by 0.2 is 50,000 shares. 50,000 shares. Let's see. I mean, I don't know if that's completely accurate. Let me just check on here. So go to Delta. Let's see here. On that breakdown candle below 32.25, we have 20,000 shares, 14,000 shares before that. So in in these two candles, 2 3-minute candles combined, you're talking at most 35,000 shares. If you had a $10,000 R, you would need all of this liquidity and more to get filled on your trade. Just, it's not going to happen. You will not get filled. You will not get all of those shares. And you can't get out. It's true, Albert. On the flip side, when you come down to exiting down here, you're not going to get filled on all your shares. The way that you trade is just, it's going to be fundamentally different with bigger and bigger R's. Now, who wants to have that problem? I do. I want to have that problem, right? Would love to, be swinging a $10,000 R and have $10,000 mean, pretty much nothing to me. That's great. Great problem to have, but it changes things, right? However, instead of a 3-minute chart, could someone easily do that on a daily chart, right? Trading at a higher time frame or making a long-term investment. You guys know how many shares Warren Buffett was buying in this area here? A whole lot of Oxy. You guys didn't know he's like almost like 15% ownership in this company. He started it like back here, I think, somewhere. So yeah, he was buying a whole bunch of shares there. And yes. Yeah, approximately. Yeah, approximately, Josh. A lot of shares. And yeah, he's building it a position into an asset that he wants, right? His time horizon is not, on the 3-minute chart. It's not on the daily chart either. I can guarantee you that. So will he be right? Yeah, was debatable, but done pretty well. So squandering out those 10%, let's do some math here. And this, let's say you have the same math that Jeremy talked about this morning, where you make out of every 2 trades, you're making only 0.4 R, right? Let's see. So if we're making, let's see. Yeah. Out of every 2 trades, you're making 0.4 R. And what with 50 trades, you're saying, all right, let's type this out for people that weren't there. So he's saying if you make 50 trades per month, right? And out of every, you're exactly a 50% win ratio. 50% win ratio. So let's say you make, what is that, 1.2 R in one trade, and then you lose 0.8 R. Minus 0.8 R and plus 1.2 equals positive 0.4 R, right? So 0.4 R out of every 2 trades, right? Times basically 25 trades, right? Because they're every 2 trades we're talking about, is equal to 10 R. So times 25 equals 10 R per month. All right. So we're just talking day trades. 50 trades, it's okay. It's pretty decent amount. It's not over trading a ton. It's not, but it is a good amount of trades, right? So you would have to be trading probably a little bit more than just like an hour a day to get those 50 trades, depending on your strategy. Anyway, so if you had a $500 R, let's see, R equal to 500, right? That means that you're taking $5,000 a month. And that means if you're taking 10% of that, you're sequestering $500 every month to set aside for some assets. Not life-changing, but let's see, if you bought SPY, here, let's change to SPY. Let's talk about this because people that were here in Slack know that we were public about this. We talked about buying a couple shares here. So let's say you only had, or let's say you've done this for a couple months, you only had like $1,000 to put in. Okay. $1,000 divided by 220, 12, 4.5 shares. So let's just call it 4 shares, right? Because right here, say you bought 4x SPY shares, right? It's 4 SPY shares at 220, 12, $880. After a, what was it, about, what do we say, 89% increase? We'll call it 90% between friends. You went from about $880 to 1673. That's not even, it's getting out somewhere around here. somewhere around here. After, we broke down and retested and then started to fail. And this is what you made without doing anything else, just buying those shares at one time and then waiting. Yeah, well, we were saying 0.4R every 2 trades, right? JM. So 50 trades a month, 50% win ratio, you're winning on 25, you're losing on 25, right? So between the two, you're making every 2 trades, you're making 0.4R. That's why I only multiplied it by 25. Oh, that's true. That's true, Santiala. I did not even add the dividend. Didn't even add the dividend. And this is what you made. This is the money that you made while you were sleeping. Now, instead of just you had money stocked up for 2 months, what if you had money stocked up over the past year? Multiply that by 6. And did I mention that you don't have to do this with just trading, but you could do this with every source of income you have? Actually, be quite honest. When I first started my job, when I first graduated from college, I actually made a pitch to my parents why I wanted to move back home. I was living away at college, paying rent, everything like that, and I said I want to move back home. This is why. I realized that working over summers and paying rent, you don't have much left, if anything. And in fact, you have to get it subsidized by loans or 529s or whatever you have available. And instead, I was like, well, if I can move back home, I showed them this is how much I can save. So for the first couple of years, I actually saved about 90% of my take-home income after taxes. 90% after taxes. You got to pay those taxes. Unfortunately, as a single man W-2, there's not much you can do to avoid taxes. So, so I saved 90% of my income. True story. Over time, did that ratio fluctuate a little bit? Yes. Eventually, I bought a house, and well, when I made the pitch to my parents to move back home, I was asking for no rent, and I told them why. And I actually showed them this is how it would set me up for life. Essentially, it would help me save up for a down payment in California. Kind of a lot. And then I house hacked it. I rented out. I bought a 3-bedroom townhome, rented out 2 of the rooms, and yeah, that's how I got kind of started on my investing journey, was through saving. It's very simplistic. And a lot of people will probably say, hey, you could do that as a single person, Thomas, but once you have kids and everything else, you have other commitments. And 100%, totally agree. I have a kid now, and I realize that. What do? You don't have to save 90%. This is what I could do being a single person. I could do that. 0. Yeah. No, I didn't charge them rent. They didn't charge me anything though. So I made a pitch to my parents to move back home, move into my own room, and not pay any rent. I mean, be honest, I had a decent job coming out of college, so it wasn't like I was living on nothing, but still, it's a pretty high savings rate if you ask me. And then, I mean, to this day, when my wife and I are both working part-time, we're still saving a lot of money. But it's all comes from an initial thought process of whatever money I make, I'm gonna, if I make $5,000, I'm gonna save 10% of that and set it aside for some other assets, whether it's stock assets, whether it's real estate assets, whether it's treasury bonds. By the way, if you guys haven't looked at it yet, go look up I bonds, and especially if you have extra money sitting in a bank account, go look up I bonds. You can pick me later. Safest return you're going to get. All right, so you build wealth by having those assets. And KP, ask me in 10 minutes and we'll talk about it. All right, so for long-term investing, you could come up with a buy and hold strategy. You could just buy ETFs. What type of strategy do you employ with this $500 that you're saving every month, Thomas? So could be something as simple as you want, really. It's like I said, our job is to follow the plan, and that implies that you have a plan. So do you have a plan for your long-term wealth? And what does it consist of? So if you want to buy and hold and dollar cost average into things, I'll be quite frank, I have accounts that do that. Even though, I like trading, if you have, like my wife has, 401, not a 401k, but 403b account. If you have a 401k account, a lot of times you can't trade options in there. And, best you just have a couple different mutual funds. So your two options are buy and hold, pretty much, or you can come up with some simple strategy where you're either long the market, or you, after maybe it crosses a moving average, and then you're long, you switch over, sell your shares, and you buy bonds, and then you go back and forth, or you go to cash, some money market fund that gives you, I don't know, 1%, 2%. That could be your strategy for your longer term accounts. If you have money spilling over into taxable accounts, which is a great problem to have, then you could implement the same thing. You could buy shares, and then you can start, once you get up to 100 shares, you can start selling covered calls and then protecting it with collars. All those things are easily learnable. Learning things about options always can sound scary, but they're really not that scary if you approach them with the right amount of risk and you know what you're getting into. So there's plenty of times I had lines down here because I sold options down at some of these levels here. And you say, well, Thomas, if you sold a 350 naked put, that means that you could potentially have to buy 100 shares of SPY at $350. Yes, and I could do that. I had the wherewithal to do that, and I was okay doing that, because I would then turn around and start selling covered calls. It's just part of a certain strategy, and I would protect it. And you could have lines in there where you would start protecting it, right? But you can come up with that plan beforehand. You sequester this money and say, okay, well, maybe I want to invest in a real estate deal. Well, if you want to make those connections, we actually have a lot of people in real life trading that are involved in real estate, and you want to make those connections, learn a little bit about real estate, that's available too. You don't have to learn from real life trading, of course, but it's available. And I mentioned house hacking. You can go Google that term and figure that out, because I highly recommend it as well. It's a great use for your money that you sequester and set aside for longer term investments. So all it really drills down to is coming up with that plan, creating margin in your life. What I mean by margin is what's your savings rate? How can you increase that amount? How can you increase your income? How can you lower your expenses so that you can have more margin to work with? The more margin that you have to work with, the faster you will achieve financial freedom. Period. Right? So can you increase your income from trading? 100% you can. Is it worthwhile to do? Does it take time? Yes, it does. Most people that I see in the market that have an overnight success experience, it's actually very detrimental because they have this quick win and they think that they can keep repeating this quick win all the time. That usually happens via long calls, and then they make 100% return on their long call, which actually sidebar, 100% return on an option. If you bought it and you had no stop, that means that 100% loss was your risk. That means 100% return means you made 1R. Just throwing it out there. If you made 100% return and you just bought an option and you had no stop, yeah. Anyway, so a lot of times people will do that. They bought a whole bunch of calls, they made this huge return. They think they can keep repeating that and find out that the next time that they do that, they push, all in again, just YOLO a whole bunch of calls, and then they go to zero. Happens a lot. A lot of those people are counted in the statistic that 90% or 80-90% of traders don't make money. It's because you have a lot of people that are approaching it in the wrong way. Whereas if you approach it with the thought process that it's going to be a long game, got to build the discipline, because you really got to discipline yourself more than anything, is just controlling yourself, controlling how you trade, respecting your rules. Trading is actually a great way to build your own character in a lot of respects. But approaching it with that mindset and that journey that there's no holy grail, I can be adaptable, but I'm going to come up with the plan and I'm going to follow it. I'm going to give my permission to myself to evaluate my results, could be monthly, right? And evaluate my results, figure out what I can do better, approaching it like a business. Those are the people that I see the most success in. Trading is simple, but not easy. A wise man once said. Thanks, Jay. So what does that mean? Trading is simple, but not easy. He actually said it a little differently, but that's basically paraphrasing his words. True or false? It's simple to go take a walk, right? True or false? Zach Johnson says true. No one else thinks it's easy to go walking, I guess. Maybe if you can't walk, then that's not a good example. But yeah, for most people, handicapped withstanding or elderly withstanding, walking is generally simple for those able-bodied. But how easy is it to walk 1,000 miles? I can say it's not personally. Yeah, trading is simple but not easy, right? There's a very distinct difference there, and a lot of people get fooled by this, especially if you come from another profession that required a lot of study. Say 100%. I always viewed trading as pretty simple. There's things to learn and things to remember and stuff, but ultimately it's pretty simple. But easy, definitely not. So it's why it's great to have other income streams. They could be, dividend stocks, right? If you bought those dividend stocks, right? Santiago was mentioning, I didn't even count the dividends that you get in SPY. Hey, as long as the world keeps turning, SPY is probably going to be there. You probably keep collecting those dividends. And the nice thing about indices is that eventually they vote out all the losers and replace them with another winner, right? So you don't even have to do that in your own portfolio of individual stocks. So there's benefit there to ETFs. But could be dividend stocks, could be rental real estate, could be notes, could be side hustle, could be consulting, right? I've always told my wife that, hey, anytime I want to, I probably can go back and consult in the engineering world and probably do okay. I could be those that are creatively minded. You could create something, right? You could build an online course. You could build crafts, sell plants, all sorts of other things you could do with that time. Because as people were mentioning, go play golf, go take a nap, go do something, right? That go do something is usually best if it's another stream of income. So if you're looking to trade full time, figure out also what you're going to do with that time, because you don't want it to fill up with boredom and just over trading, because that is a recipe for disaster for sure. All right, cool. I got a couple minutes left. I will touch quickly on I bonds for KP. The holding time on I bonds, technically you can hold them for as long as you want, actually. You can cash them in after a year, actually. After 1 year, you can cash them in at the cost of the previous 3 months worth of interest, I believe. You can go find all this info out for yourself. Don't take my word for it. Go do your own research. But as I understand it, you can go to treasurydirect.gov. Yeah, treasurydirect.gov. And I think right now they're paying like what, 9.6%. It's not bad. Yeah. If you have money sitting around that's in a savings account that you don't need necessarily for a year, makes sense to me. Yeah, so after a year, 3 months worth of interest, you cash it in. After 5 years, I believe, then there's no penalty, but it will last for as long as you want. Technically, they're 30-year term, but they will just hold it longer. It could be a 50-year term if you wanted it to be. They'll just keep holding it. So, yeah. Yep. U.S. government is backing that bond. So if the I bond doesn't pay out, then we all have much bigger problems. Is basically what it boils down to. Cool. Any other questions? I hope I explained some of this well. I know yeah, hopefully I explained everything well. If you guys have other thoughts, questions, yeah, now's the time. Let's see, anything happening after markets? Don't see a whole lot. Let's see, there were some decent earnings on deck for this week. Let's see. We go here to earnings whisper. Grab this. All right, so we didn't know. You could always follow earnings whispers, and then they kind of tell you, actually, these are all the earnings that happen after the close. There's a whole bunch of them here. Let's go look at some. AMD gap down, says Harold. Okay. Yeah, post market. Ooh. Into the 100 gapping down. Okay. So semis maybe. Nvidia's not really gapping down a whole bunch with it. That's interesting. But yeah, AMD definitely gapping down. Conference calls starting soon. Oops. PayPal gapping up. PayPal's gapping up after market. Breaking out above there. Looks good for PayPal. This is probably a fade tomorrow. You got a whole bunch of bull candles in a row, gapping up pretty large. I wonder if there's any sort of weekly. No weekly, monthly. No. Still gapping up pretty large. Probably could look for a little bit of a fade at some point tomorrow on PayPal. Actually, Oxy had earnings. How's Oxy doing? Oxy is gapping down post-market, okay. Into this top of this channel here. Airbnb. Also gapping down. Ooh, this is pretty nasty. Gapping down into some support, but it is a gap and go. Probably look for a little bit of a follow through. The downside. PayPal is breaking resistance area, so I would look more immediate term, intermediate term. Looks bullish. Starbucks gapping up. Ooh, wow, that could be a fun gap and go too. Starbucks doesn't really have a ton of volatility, but so it looks like a mixed bag. Yeah, SPY and Qs haven't really moved all that much. So mixed bag on earnings to me just means that we probably again, I think a dip is in order at some point, but we probably resolve to the upside after that. PayPal share repurchase program. Okay. Cool. EA doing anything fun? Not really. Activision still pretty sideways. Yeah. Gilead is actually gapping up. So funny how it's like had this run up and it's like, oh wait, they actually cured Pepsi. So it's not recurring revenue. I kind of hate that they get punished after that, but that's what happened. Neo looks like it's gapping up a little bit, but not doing too much. Yeah, it doesn't, it's flat. I don't know if Neo actually had earnings. Okay. See now. Alcoa, I don't see. Did they have earnings? No. Alcoa is nothing's really happening. Just for earnings, nothing's happening at least. But as the stock goes, we're kind of into this consolidation area from back here. So it's an area that it probably wants to hold. Probably getting close to some sort of weekly. There we go. Yep, bounced off the weekly 100 right there. So I would look for that to hold there. It's probably what you want. Wow, look at that. Look at that. Nice top of the channel there. And oh, look, what do we pull back into? Huh. Go figure. Nice. Edward, in on that hammer. Yeah, you would be. Nice. Oh, not this hammer? Oh, yeah. This is the weekly hammer, huh? Oh, back here? Or were you a boss?